Ben ritrovati, siamo di nuovo sul floor del New York Stock Exchange, sta per terminare la settimana, abbiamo visto una fine di febbraio molto positiva, un inizio di marzo piuttosto incoraggiante, ne parliamo con il mio ospite qui sul floor che è Joe Greco, Managing Director per Meridian Equity Partners. Joe, thank you so much for being with us.
Thank you for having me.
So Joe, what is driving the market today? There are no big data coming from the United States. We are looking at oil and we're looking at Europe.
Yeah, really not a lot of movement in the market. We were off small pre-market, and then the market lifted a little, but we're kind of staying very tight to where we closed yesterday. A little bit of negativity out of Spain this morning that affected us somewhat, but at the end of the day, we had a very volatile week. I mean, gold got destroyed the other day. Moved almost 5.5%, rebounded a little bit yesterday. So I think people were starting to calculate what do we really want to do here and what do we want to have going over the weekend. So I tend to think we'll stay in a very tight range throughout the day and perhaps lift a little into the close. From a technical perspective, though, we are sitting right around that level where I think we could have that 1372, 1373 in the S&P into the bell.
And that could make a difference maybe. And we've seen a great month of February. And a lot of people were saying, yeah, well, the last week of February, a lot of window dressing, and maybe in March we could see a correction, but we haven't seen any so far.
We haven't seen the correction just yet, but that's interesting that you bring that up. Several client dinners this week, all of them saying the same thing. At what point do we lock in? They all want to know, when do we start locking in these profits? January was, gangbuster. February was, added to those gains, and they closed very, very nicely. So at this point, people start to get concerned. How can we, protect our portfolio to make sure we don't have what happened last year, where the first half looked great and the second half was a little troubled?
And talking about this week, what happened, we heard Bernanke talking again. There is no mention whatsoever on another stimulus, no QE3 in sight. A lot of people say that actually is not a bad thing.
Some say not a bad thing because you want to. The goal really is not to need the quantitative easing. It's to have it as a crutch when necessary, but to be able to walk and run on your own. And the economy seems to be limping along enough where it seems healthy and it's on a healthy recovery. The problem is day to day, week to week, people don't know what to make of. Are we recovering at the speed we want to be, or is it too slow? Do we need more stimulus, or are we doing okay? What's going on in Europe? What's going on with oil in the Middle East? So there's a lot of push and pull. So people are very concerned right now. Every little word that Bernanke says is read into, and because he made no mention whatsoever, gold sold off, sharply because he removed the doubt of inflation and the quantitative easing. So people start to wonder: is that close the door, or does it just close the door a little bit and leave it open just in case?
And talking about inflation, we are seeing oil spiking. I mean, yesterday it touched 110. Of course, there were rumors, never confirmed, actually denied, of a fire in Saudi Arabia. But still, it's still very high. And still, also Bernanke said it could really have an impact on inflation, in at least temporarily.
Well, for sure. I mean, on a household basis, that represents a significant portion of the budget. And of course, speculators have not really jumped into that just yet or piled in just yet, which when that happens, we will see a move, maybe even a 10, 15, 20% move up in crude oil if that happens, where the speculators take hold. At this point, most of it's fueled based on geopolitical risk and, of course, just simply consumption at this point.
Now, let's talk about technology. It's a big day here at the stock exchange. Yelp, huge, enormous, over 60% at the opening. Is there like frenzy waiting for Facebook?
Clearly there is, and clearly there are people who are interested in a name like Yelp, which right now with the amount of earnings and revenue they had, under 100 million, and the market cap based on the pricing today of over 1 billion, it seems very unlikely that people are looking to stay in this name long term. So I would tend to expect that the chart on this will look very sharp up on the first day or two, and then probably come in once we find out about Facebook, because people are going to clear their books for Facebook so they can get into the IPO.
Forget Yelp at that point.
Unfortunately, I think just based on the numbers, I would tend to say if we speak in 1 month, that'll be the case.
Thank you very much, Joe, for being with us.
As always, thank you.